Good morning, I'm Maiki Oreta, and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The Philippines is off the European Union's dirty money watch list. Finance Chief Ralph Recto says no new taxes are coming even with the government's debt at record highs. The Trade Department cracks down on illegal vape listings, giving online platforms just 7 days to comply. And the White House is now on TikTok. All that and more coming up. Let's check on how global markets moved overnight. Wall Street ended mixed, with investors in a wait-and-see mode ahead of Federal Reserve Chair Jerome Powell's remarks this week. The highlight is the Fed's annual Jackson Hole Symposium in Wyoming, August 21 to 23, where Powell could drop clues on the next rate moves and the outlook for the economy.
When Powell speaks, he is very, very measured. So it's really hard to imagine that he would say something that would be like, oh, yes, we're definitely going to cut rates, or we're definitely not going to cut rates. But sometimes if you can parse his words, you may get a little bit of a hint of one direction or the other. So, that is one thing that we would definitely look for. I don't think we would actually get that. I think we're just more likely to want to see what his comments are on the economy.
The Dow Jones Industrial Average finished flat with a slight gain. The S&P 500 slipped 0.6%, and the Nasdaq dropped 1.5%. In Europe, markets closed higher. London's FTSE gained 0.3%, Germany's DAX 0.5%, up by 0.5%, and France's CAC 40 higher by 1.2%. Here at home, the Philippines is no longer on the European Union's list of high-risk third countries considered dirty money hubs. The Bangko Sentral ng Pilipinas says this marks the country's third successful exit from an international watch list this year. The EU cited stronger enforcement of anti-money laundering and counter-terrorism financing measures. It also noted the resolution of technical issues flagged by the Financial Action Task Force. BSP Governor Eli Remolona Jr., who also chairs the Anti-Money Laundering Council, stresses that despite this development, efforts to strengthen defenses against financial crimes continue. He adds that the work is underway to further enhance the country's capacity and to align with global standards. The Philippines risks losing over $2 billion in export revenues in the latter half of 2025. That's according to the UP Center for Integrative and Development Studies, or UPCIDS, which flagged the impact of new U.S. tariffs. In a policy brief, the think tank explained that the 19% duty exempts high-value sectors like electronics and machinery, but it will still hit about 1/3 of Philippine exports to the U.S., notably labor-intensive goods such as garments, footwear, and tobacco. Using detailed 2024 trade data and product-level elasticities, UPCIDS simulated the tariff's short-term impact. Its findings show exports to the U.S. could drop from $14.6 billion to $11.5 billion, resulting in an estimated $2.2 billion trade loss in just 6 months of 2025. No new taxes. That's the government's promise to Congress, even as the country struggles with record high debt. That assurance came from Finance Secretary Ralph Recto himself during a Budget Coordination Committee briefing at the House of Representatives. He said this reaffirms the Marcos administration's fiscal consolidation strategy, even as the country grapples with record high debt. Instead, the government will prioritize already filed measures, including an excise tax on single-use plastics and a tax amnesty program. The Finance Department also made it clear that it will not support any fresh tax proposals. Outstanding debt climbed to a record 17.27 trillion pesos in June, up 2.1% from the previous month, and 11.5% higher year on year. The government is hitting pause on fixing the military pension system, delaying action on what many see as a fiscal time bomb. Finance Secretary Ralph Recto says that the reforms are too costly for now, adding that there will be no movement on the issue for the rest of the term. This follows Budget Secretary Amenah Pangandaman's remark that the reform may be discussed in September, but that fiscal space remains tight. Meantime, the government is proposing to raise next year's pension and gratuity fund by nearly 37% to 197.99 billion pesos. Recto stands contrast with former finance chief Benjamin Diokno, who pushed for reforms to cover both active personnel and new entrants. No holidays for money movers. The central bank is making sure financial markets stay open even when the rest of the country shuts down. Sujin Kim has the details.
The Bangko Sentral ng Pilipinas has issued new guidelines to ensure that specific operations remain open even during holidays or work suspensions. Under the memorandum, key functions such as payments and settlement systems, foreign exchange trading, and currency operations will continue uninterrupted, except in cases of a nationwide holiday declared by Malacanang or if the BSP governor orders a suspension due to safety risks. The business community welcomed the move.
That's a big help. And the banks are 24/7. So I see no reason why that they should have, in holidays, would not allow them to function because it's digital.
Traders noted that in a country like the Philippines, where holidays can add up to over a month each year, considering some 20 fixed holidays coupled with special and LGU holidays, this rule ensures that financial markets will no longer trail behind.
So, the problem with having a holiday or a non-working day in forex markets is that other markets are moving. So the problem is, if you're frozen, you are not allowed to move because of a holiday, then chances are you'll probably trade at a much higher or lower price than originally intended.
Diaz added that institutional and corporate buyers will be the biggest beneficiaries, while short-term traders may see fewer jackpot days. The new policy is expected to reduce extreme volatility.
In the medium term, the market could definitely deepen if offshore accounts as well as corporates take advantage of the 24/7 or always open nature of markets. In the longer term, I think it will provide stability.
The policy also signals that the Philippines is moving in step with international practices.
The impression also for a buyer from abroad or an exporter to the Philippines, they can see that we are moving, in tandem with other countries as far as international trade is concerned.
Still, analysts warn that round-the-clock trading does not eliminate the possibility of major repricing events, nor does it automatically mean that trading depth will expand overnight. Sujin Kim, Bilyonaryo News Channel.
Philippine markets are pulling in opposite directions. The bond market is surging while stocks remain stuck. Interest rates are low and headed lower. Inflation is cooling, but global headwinds from U.S. tariffs to China's slowdown still weigh on sentiment. Joining us now is BDO Capital President Ed Francisco. He's here to share what he's hearing from boardrooms, what deals are still moving, and where he sees opportunities in this very interesting market cycle. Hi, Ed. Good morning, and thank you for being here with us.
Good morning, Maiki.
Okay, so Ed, we've got easing inflation, we've got lower interest rates, but at the same time, we've got external pressures like tariffs and weaker trade. Where would you say the Philippine economy is right now?
Of course, we've seen the numbers. GDP slowed. We felt that also. So that's the nice thing about it is that in a way that's history. We're seeing an improvement already. Again, we're expecting rates to go down further, so that should be good for the borrowers and investors. And you're right. When I talk to the corporates in their boardrooms, they're positioning already for the growth. Some of them have postponed it. The large corporates have continued to do that anyway, these large deals. But the middle market have been a little reluctant. I think now they're revisiting it, so we're okay. We should be okay the next few months.
Okay, you said when you talk to the corporates in the boardrooms, they're positioning for growth. What does that look like for the big guys and for the smaller guys?
Okay. Now, for the big guys, even first quarter, even when GDP was, I guess, already slowing down, they did not slow down. That's why when you look at the capex of SM, Ayala, Boite, San Miguel, they're still continuing at their double-digit billions growth, right? Because they have the war chest, they have the liquidity to do that. So we did not expect a slowdown there. Where we expected the slowdown, or where we've seen a slowdown, is in the middle market because these 1 billion or 2 billion capex is substantial relative to their size. And that's why some of them have taken a pause. But the nice thing there is that some of them already started increasing importations, increasing their inventory because they're seeing a rebound. And then some of them already have at least started expanding capacity. Because in the past, of course, capacity, with no new capex, it's just really increasing your sales, right? But you might already be bumping up your capacity limits. So we're seeing that improvement, at least at the next level, which is good.
Based on the capital expenditure budgets you're seeing now and for 2026, how would you describe the current state of the Philippine economy, Ed?
No, so the current state of economy has slowed a little, right? We were hoping it would be a better year compared to last year, so the GDP numbers have gone down. But then, as you mentioned, inflation is going to be much lower, so that gives really a good signal for us. And the lower inflation, I guess, is a good signal for the consumers themselves because we're really consumer-driven, so that should pick up. We're seeing the pickup there. We're seeing 2 rate cuts expected. I guess the key, as you mentioned earlier in your segment, is what the U.S. will do because we don't want the disparity in rates to be too much because that will cause capital flight. But I'm seeing increased interest anyway in the Philippines for them to invest in the country.
Yeah. Okay. Globally, all eyes are on the Jackson Hole Symposium. Federal Reserve Chairman has the power to move markets just with his words. He's very measured, though, and he's not that direct. So everyone's going to be really reading into it and dissecting. He could stay hawkish and keep rates high. He could also get dovish and hint at rate cuts. Based on both scenarios, how do you think both scenarios would impact emerging markets like the Philippines in terms of borrowing costs, capital easing, and investor flows?
Yes. No, in terms of interest rate costs, it shouldn't affect us too much because at least the BSP, in fairness to them, have signaled that they will, or we're expecting a rate cut, in fact, in August next week, and another one later on this year. So regardless of what happens in a way to the US. But admittedly, even if I'm sort of already agreeing with President Trump in the sense that, the US has been improving and they should already, they're too conservative. They should already reduce rates, and they haven't done so. So I think that will happen. Now, if they don't reduce rates, it could mean that the peso will depreciate, but the growth will still happen here anyway. At least just reaffirms we're on the right track, and then the growth and the expansion should be further for the Filipino companies anyway.
So yeah, you mentioned the BSP. Expectations are 2 rate cuts, regardless of what the U.S. does. With rates headed lower, how quickly, Ed, could cheaper money flow into the system in terms of borrowing, investment, and overall activity?
Right. No, in terms of cheaper money, basically when there are rate cuts, it already flows down immediately in terms of the lending. No? In fact, at the BDO side, we just had our ManCom presentation, and our SMEs, our middle market, our home loan, housing loan, credit cards are growing even much faster than our corporate loans. Roughly, corporate loans are growing around between 10 to 12%, still significant, right? But the consumer loans are growing between 15 to 30%. So it shows you there's growth there. And some of these are really for their businesses, SMEs, because they use their personal accounts for their businesses. that's growing, that's productive. So the economic GDP is showing, let's say, 5.4. It's really growing faster than that. Maybe a problem, or it understates the economy. The economy is moving faster, but then because a lot of this is through remittances, they're unreported, but there's a lot of growth, there's a lot of movement. And we're seeing that even with the daily transactions of remittances, what's happening with our BDO Pay or even equivalent of the GCash Maya. We're seeing a lot of volume there. And that's a signal that money is funneling. And even the stock market, for example, yes, the market is down, but look at in terms of volume, the daily volumes are very strong. So it's much stronger. So
Yeah, okay. Audio quality is not so great. We're going to take a quick break, and then we're going to try to get Ed back to continue this discussion. Business 360 will be right back. Welcome back. We're with BDO Capital President Ed Francisco. Ed, picking up where we left off, we were talking about volumes and growth. Let's get back to that discussion. Can you hear me? The audio okay?
I can hear you.
Okay, great.
I can hear you.
Yeah, great. The BSP just announced key financial operations, forex, settlements, even check clearing will stay open even during holidays and emergency suspensions. This just puts us in line with the bigger markets, following best practices. From your vantage point, how significant is this move in terms of how it will help us with volumes and attract more investors?
It's something we've always requested, as Mr. Barcelon said. We already have always been operating 24/7. It's really the government who always likes to close down their operations when there's a storm. We're still in the office. We don't call off our work off when there's a signal number 2 or whatever. But when the government shuts down the operations, then of course we can't do anything. So this is very much welcome, and it's really something that should have been done years ago.
Mm-hmm. Do you think this will meaningfully boost confidence and participation in our financial markets?
Yes, Mikey, because people have been complaining. Yeah, how can they do deals when the markets are moving abroad, and then we suddenly have to shut down, right? So if this will provide continuity, that will mean that they'll have more confidence. As an example, if there's going to be a 4-day weekend, let's say, there's going to be Thursday and then Monday. If markets are closed, then generally investors pull out the investments, foreigners, because they want to hedge. If something happens, they're going to get stuck. But if they're confident that at least the markets are open, then they won't go in and out. So it really helped the country.
Okay, now talking about sectors and maybe thematic plays, let's talk about exporters. How are they hedging against peso swings and tariff risks? What are you seeing on the ground?
Yeah, in terms of foreign exchange risk, they are not really actively hedging because we're expecting the peso anyway to be stable and even go back to the 56, 70, 58, 57 year end. So we see its stability there. But in terms of the tariffs, that's a bigger issue. Some are able to hedge by able to diversify the markets. They're really looking at it. But some are really hit, right? So as you mentioned, the exporters, especially the semiconductors, if they're not anymore exempted, that's going to be a big hit, or especially the garments. But a lot of the other clients are already trying to diversify if they can or when they can, and that's what's happening with those with the ability to make those connections.
Mm-hmm. Okay, property. As growth picks up, as we head towards 2026, GDP is expected to increase from about 5.4% to about 6% in 2026. How are they preparing for that?
Right. At least in terms of the expected growth, what's happening is that's why they're recalibrating. Now that we're seeing an improvement in the economy, it was a little sleepy, right? So now it's reawakening. So they're going to start investing again. Because, of course, when you invest, sometimes CapEx takes a couple of months. Sometimes it takes a couple of years to invest. for the big conglomerates, right? To build a new power plant can take 1 to 2 years if it's solar or wind, and let's say a new extension of a bottling plant can take years. So that's why they have to plan that in advance. We're seeing that anyway, so we're gonna be financing a lot of that, which is good.
Speaking of financing, let's talk about banks. Are they still being more selective? Are they chasing MSMEs? What are they financing now?
I think the banks are the competition is really very intense in the banking sector, right? So, for example, in some of the deals we're doing, banks are really diving in pricing. Banks, some are even willing to, I guess, be more lenient just to win the account. So it's that competitive. That's at
Yeah.
least in the large corporate, in the project finance. And even when I talk to my colleagues in the consumer side, it's very active. Where they all have their promos, their gimmicks, and which is good because it redounds to the customer also, right? Because they have a lot of choices. We have a lot of excess capital, and that's why the liquidity is there. So
Yes.
it's good for the consumer, right? Yeah, because they have lots of choices.
Yeah, so they're chasing MSMEs and retail lending growth.
Yes, yes, and NPLs are generally low, so it's very well controlled. So we want to grow.
Okay, all right. On to another front, corruption and PPPs. President Marcos denounced corruption in flood control projects during the State of the Nation address. Could weaving in private capital by way of PPPs make these projects more efficient? Are you in favor of that push for the private sector to jump in?
Absolutely. If they're willing to privatize a lot of this, where private sector takes the lead and has control better, rather than do a government allocation, then just give it purely to the LGU where there's a lot of problems. That would help because we would like to see some big heads roll because yes, we've identified these flood control projects that have been why there are only 15 of them. So what's going to happen there? And then we also want to see people, these engineers or these LGU people who have actually been approving this when there's actually nothing happening.
Yeah.
There should be checks and balances and why is nothing happening there. So somebody has to so there has to be accountability rather than just reporting.
Yeah, not just as a bank, not just as the president of BDO Capital, as a private citizen, as a Filipino that cares about the country. After all of these accusations, you want to see some action. All right. More broadly,
Yes.
Ed, let's talk about corruption and investor confidence. When you sit with investors, foreign investors, when you sit with local CEOs, is this brought up? How big of a drag is this?
I'm a past president of MAP, and the current theme or the largest issue now that the MAP are 1,200 strong members of CEOs is corruption. So we had Mayor Ben Magalong recently talk, and I guess we're hearing more complaints among members of the corruption. And in fact, that has been the biggest thorn, and that's why the investments have been slow. President Marcos has been doing a good job in roadshows. People have come to me because they were really impressed with his presentations. But then there's still, even if there is a lot of effort to reduce red tape with ARTA, with kudos to Ernie Perez, but then when it takes so long for and then all this corruption, that deters them from the final investment sometimes. So and that really turns them off. And that's why our markets are also more rebound because of that. We have very good economic managers, but if there's continued corruption and then there's this issue and why the budget is such that there's so much flack, there's so much fat. If you can delegate more to the private sector so that there is more checks and balances, well, the private sector would step in and help.
Yeah, okay. Well, look, we're looking forward to that collaboration. Ed, last question. From your deal pipeline, what is the clearest signal about where business confidence really is in this second half and as we head into 2026?
Yeah. No, at least you said it right at the start of the program. Equity markets have slowed, but frankly, the debt markets are extremely strong, no? Because In fact, I think it was yesterday or today was the issue date for the RTBs. I
Yeah.
haven't seen the announcement from the National Treasurer, but I also heard on some roadshows extremely strong. There's so much liquidity. Whenever we just did the Philinvest, we did an Ayala Corp bond, prefs, always oversubscribed. BDO, we had their 115 billion sustainability bond oversubscribed in 4 days, right? There's lots of money. It's really just the equity markets that have slowed down. So people are cautious. They're revisiting. So hopefully we will see Maynila, the list soon.
List.
And then we're working, frankly, the big savior also for hopefully for the market will be the SEC, because SEC Chair Francis Lim is very open to reforms to make it easier to attract more investors, to attract more issuers. So we're working closely with him. It's this joint group of ICD, Finex, Capital Markets Development Foundation. He's very open, and we appreciate that. Working kudos to the SEC. So we hopefully will see more changes, and that will spur more, at least on the equity front.
Yeah, okay. Thank you so much, Ed. That's all the time we have. But thank you for the work you do. We're excited to see the fruits of your labor in collaboration with the SEC and the PSC. All right. And on to other news, the DTI is cracking down on illegal vape sales online, giving e-commerce platforms just 7 days to clean up or face sanctions. The move targets products that violate existing laws, with the agency reporting a surge in illegal listings, nearly 92,000 over the past 2 years. Failure to comply could mean legal action under the Consumer Act, the Internet Transactions Act, and other laws. Tougher enforcement is also being coordinated with the Health Department and the BIR amid growing concerns over unregulated vape sales, especially online where young users are most exposed. International arrivals to the Philippines have stalled, reaching 3.51 million from January to July, barely moving from last year's levels. Compared to pre-pandemic numbers, the gap remains wide. Arrivals this year are still down 26.6% from the 4.85 million visitors in 2019. The Tourism Department warns that a string of foreign travel advisories over criminal incidents could deter even more investors, putting pressure on one of the country's key dollar earners. More Filipinos are swiping, tapping, and clicking their way into credit, from plastic cards to digital loans, marking a big shift in how consumers spend. But along with the boom come big risks, scams, fraud, and sky-high interest rates that could trap borrowers in debt. Sujin Kim reports.
Based on the 2025 Credit Perception Index by TransUnion, the overall credit perception score remained strong at 73, though slightly lower than last year's 74. Awareness of credit products has risen, with more Filipinos turning to buy now, pay later options.
Traditional products, credit cards, personal loans, mortgages, customers felt were risky, whereas BNPL, payday loans, I think installments were seen as more helpful.
However, acceptance of credit messaging has dropped, indicating that trust in promotions and marketing claims from lenders remains weak. More than 91% of Filipinos now use fintech services, and 1 in 3 consumers say their first financial product is an e-wallet rather than a traditional bank account.
Convenience rates vary highly amongst users. I think doing anything on your phone is certainly more convenient. There's an app for pretty much everything these days.
Yet barriers to credit access remain.
So what consumers have told us is it's around fraud and scams, where consumers are feeling that the trust isn't quite there, and they're worried about borrowing and potentially being a victim of a fraud or a scam. And they're also worried about the interest rate and their ability to actually pay back what they're borrowing.
Despite these risks, the trend is towards greater formalization. TransUnion data shows that reliance on family or friends for borrowing has declined. More Filipinos are turning to banks, virtual banks, and other regulated institutions. This underscores the need for stronger regulation to safeguard borrowers.
BSP and SEC are responsible for. I think have a good hold on managing that part of the industry. And so I think that if those two things continue, strong regulation as well as trust, then I think it'll end up very positive for the industry and for consumers.
Even with growing confidence, the threat of unregulated online lending apps remains a major obstacle. Cases of harassment, data privacy breaches, and abusive practices have highlighted the urgency of closer monitoring to ensure that financial inclusion does not come at the cost of consumer safety. Sujin Kim, Bilyonaryo News Channel.
Shell Filipinas Corporation is setting aside up to 4 billion pesos for new investments through 2030, a move that signals its long-term bet on the country's energy demand. President and CEO Lorelai Kimbao Fiscal tells investors at the Philippine Stock Exchange that spending from 2027 to 2030 could reach as much as 4 billion pesos as the company expands its asset portfolio. She says that the plan focuses on disciplined cost management and a strong capital structure. For the first half of this year, SPC keeps capital spending at 600 million pesos, about the same as 2024 and lower than 2023. The investment push comes as global energy markets transition toward cleaner fuels, making the Philippines a strategic growth frontier for Shell. Morocco is taking a step closer to nuclear power, signing a deal with South Korea's DL Engineering and Construction to explore small modular reactors, or SMRs, in the Philippines. The Memorandum of Understanding covers feasibility studies, site assessments, and long-term planning for SMR deployment. Founded in 1939, DLE&C is a South Korean construction firm positioning itself as a total solutions provider in engineering, procurement, and construction. Morocco says SMRs could help power off grid areas. Each unit can generate up to 300 megawatts and can be built faster than traditional nuclear plants. The deal puts nuclear back in the spotlight as the country grapples with growing demand, high energy costs, and the push for cleaner power sources. On another front, Senator Mark Villar says that the Philippines needs a comprehensive flood control master plan, warning that the current patchwork approach has failed to protect communities. He points to billions of pesos in damage from recent storms as proof that the status quo isn't working. Hanati reports.
It's time to come up with a comprehensive flood control master plan. That's according to Senator Mark Villar as he attended the first Senate hearing on the anomalies of flood control projects.
Ang Pilipinas po ay napaka-prone sa baha. In fact, just this month, nung nakaraang buwan, nagkaroon tayo ng bagyo at halos 3 milyong pamilya ang apektado.
As a former DPWH secretary himself, Villar says the lack of coordination and continuity in flood control projects has led to massive losses, with nearly 3 million families affected by recent storms, up to 40 deaths, and damage reaching 3 billion in agriculture and almost 17 billion in infrastructure.
Base po sa karanasan ko bilang Secretary ng Public Works, napaka-importante po ang master planning sa flood control. Kasi pwede mong ayusin isang section at bibilis yung daloy ng tubig, pero pagdating sa ibang section na walang flood control, maiipon yung tubig, mas lalala yung baha sa ibang areas.
Currently, there's no integrated national flood control master plan in the country. What exists are separate master plans for 18 major river basins, but these are not coordinated with each other. The DPWH itself has admitted there's still no integrated plan to address widespread flooding. In fact, some master plans are foreign-funded, including projects backed by the Japan International Cooperation Agency. Lawmakers warn that without a unified plan, billions will continue to be spent on projects that fail to solve flooding. Senator Amy Marcos backs Villar's call. She adds that master plans have existed for decades, yet remain unfunded.
Alam natin, noong panahon ni GMA, meron na naman, kasama na naman sina Architect Palafox dun sa flood control, tungkol naman sa Ondoy. Kaya't alam natin na tumataginting pa rin yung Parañaque Spillway at yung mahiwagang dredging ng Laguna de Bay na kahit kailan sa 1.4 trillion na ginagastos natin ay hindi napopondohan.
The flood control budget already shrank from 368 billion this year to 275 billion in 2026. Marcos also warns that many of the 15 contractors named by her brother, President Bongbong Marcos, are not genuine builders, but simply renting licenses from bigger firms. Of the 15 firms, only 7 attended the committee hearing. The rest will be subpoenaed to show up and explain their side in the next Senate investigation.
Siguro panahon na sabi nga namin ni Chairman to pierce the corporate veil of such corporations as Legacy, the various saints that are included who are hardly saintly in their behavior, and finally come to the reality that these contractors are not building anything, least of all flood control.
The Senate Blue Ribbon Committee will continue its probe on anomalous flood control projects and the lack of a master plan that has cost the country trillions of pesos. Hannah T, Bilyonaryo News Channel.
Let's take a look at how Asian markets are moving this Wednesday morning. Right now, the Nikkei 225 is in the red, well entrenched in negative territory, lower by 1.6%. Hong Kong's Hang Seng Index in the red as well, but not down by as much, down by 0.5%. Shanghai's composite is going the other way, higher by 0.1%. And Singapore's Straits Times Index flat with an upward bias. Here at home, equities finished lower on Tuesday. The main index slipped 0.2% to close at 62.77. Trading volume picked up with more than 1 billion shares changing hands, valued at 7.6 billion pesos. Analysts say profit-taking and the lack of fresh catalysts kept investors on edge. Overseas, Wall Street ended mixed as traders looked for clear signals on monetary policy. Looking ahead, global central bank cues and local earnings reports are expected to set the tone. Checking on the main gauge this morning, as of 10:44, the PSE index is in positive territory, just under the 6,300 level. With positive market breadth, looks like we could possibly finish at the 6,300 level today, somewhere there. Right now, we're higher by 0.3% at 62.99, just 1 point shy of that mark. All shares index higher by 0.2% to 37.44. Now, as for the sub-indices, we're looking at a mixed picture here. The financials, industrial, property, and services counters are in the green, whereas the holding firms and mining and oil counters are limiting the market's advance. Right now, 417 million shares have been traded, valued at 1.14 billion pesos. Market breadth is positive with 78 advancers, 71 decliners, and 37 stocks unchanged. Taking a look at the currency markets, the peso opened at 57.25 to the dollar, weaker than the previous close of 57.10. We're taking a short break. Business 360 will be right back. Welcome back. The government vows support for the BPO sector as it faces new risks from the U.S.'s protectionist moves. Lawmakers in Washington are pushing the Keep Call Centers in America Act, a bill that seeks to strip federal grants from companies that outsource call center jobs. Trade Secretary Cristina Roque says there are still no formal talks with the IT and Business Process Association of the Philippines, or IBPAP. But she is open to exploring possible support measures. She also says that the sector must diversify to soften any impact from the proposed law. The BPO industry remains a pillar of the economy, employing 1.4 million Filipinos and generating $38 billion in 2024, with about 70% of clients coming from the United States. Analysts say that the measure reflects a wider pushback against outsourcing worldwide, and the outcome could shape how the Philippines positions itself in the next wave of global services. On another front, Viber is distancing itself from online gambling, saying it doesn't host or support such operations, despite reports that some betting groups are shifting to messaging apps. The company says gambling ads are allowed only with prior approval and must follow local laws. This follows Senator Erwin Tulfo's revelation that operators are looking for alternatives after the BSP ordered e-wallets unlinked from betting sites. Tulfo even cited Bingo Plus as naming Viber as a possible substitute for GCash and Maya. Viber maintains it is working with Philippine authorities to remain compliant and to ensure user safety. The Philippines and New Zealand are moving to strengthen trade ties with agriculture and energy front and center. The two countries held their first ever vice ministerial foreign ministry consultations at the DFA office in Pasay. The DFA said both sides discussed market access for agricultural products, along with plans to expand two-way trade and boost cooperation in the energy sector. No details yet on which products are covered, and the partnership also covers investment promotion, with AstraZeneca set to hold forums and trade missions, while PEZA helps to identify ecozone sites and fast-track regulatory needs. Similar hubs in countries like Singapore and India have helped attract biotech and medtech investments, raising expectations that this new initiative could position the Philippines as a regional player in healthcare innovation. Elsewhere in the world, protesters fill the Texas Capitol, backing Democrats in a high-stakes redistricting battle. They're blasting the use of police monitors to track Democratic lawmakers, a move meant to force attendance at a special session. Critics call it harassment and a waste of taxpayer money.
I would be lying if I didn't say that it causes us a lot of frustration as well as just uncomfortableness. I mean, I've never had any type of run-in with law enforcement. I hold them very highly. I respect them. I appreciate everything that they do. And so to feel like you're under the watch of somebody, almost like we're doing something bad, it causes a lot of us anxiety and frustration.
Showdowns like this aren't new. From Wisconsin to Oregon, states have seen walkouts and quorum fights as part of the political playbook. But in Texas, Democrats say police surveillance takes it to another level. Still in the U.S., the White House says the U.S. is ready to help coordinate security guarantees for Ukraine. President Donald Trump has ruled out sending American troops, but officials say air support is on the table. That could mean more air defense systems or even U.S. fighter jets, enforcing no-fly zones.
The president has always said that there are areas of disagreement in this war that will have to be discussed and decided upon by these two countries. And so he wants these two countries to engage in direct diplomacy. He's said that from the very beginning, which is why he's agreeable to the idea of having President Zelensky and President Putin get together. And I understand accommodations for that meeting are underway. As soon as we hear more details, we'll be sure to let all of you know.
The move puts U.S. leadership to the test and could decide how far NATO is willing to go to defend Ukraine. The White House is now on TikTok, turning the app that's captivated young Americans. Its official account launched Tuesday, aimed at reaching TikTok's 150 million users and amplifying President Trump's message. Trump himself credited the app for helping swing youth votes that propelled him to victory over Democrat Kamala Harris in 2024. But security officials have long warned that the platform's Chinese ownership could give Beijing leverage over what people see. The move hits close to home. TikTok is also a dominant platform here in the Philippines, where its influence on public opinion and politics continues to grow. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BMC, the Bilyonaryo news channel.